Good evening, traders and investors. Will back here with another one, coming to you with a Thursday market recap. Hopefully you guys had a very good day in the markets today. And in today's action, well, it was a very wild day. The markets woke up very early this morning at the open and chose pure violence. Look at this massive move down on the S&P before recovering into the end of the day. And the same thing on the QQQs. The Qs at one point today were down over 2%. Very wild move to start off the morning. Big volume, big selling, and it was all because of Microsoft. Microsoft, we covered their earnings on the channel yesterday evening, and we did derive that the earnings were not that bad at all. Matter of fact, there were some pretty good numbers in there. There was no very major red flags. A couple little elements here and there, but definitely nothing that warrants a multi-year low sell-off. Take a look at some of these numbers, guys. Microsoft was down 10% to close the day, but over 12% down at one point early this morning. And take a look. The only other times that this has happened on Microsoft are pretty notable to us. So take a look here at all the other times that it's happened. Today, the drop was about 12.3% at the worst. But Microsoft didn't really have anything that bad going for it. The last time that this happened was 14.7% in the wake of a global pandemic, March 2020. Prior to that, you might ask, during the global financial crisis when it went down 11.7% on that day. The times before that, April of 2000, when you had some US District Court rulings on Microsoft's monopoly status and also the peak of the former internet bubble. And the last time before that, April 24th as well, 15.6 after the antitrust ruling and the dot-com bubble burst. Before that, another event in the year 2000. And then before that, 1998, 1987, you got Black Monday, early post-IPO volatility. So notice the themes. A lot of these prior sell-offs, they were in big old bear markets with super high volatility across the board. But not today. No, Microsoft did that all on its own today and dragged down a whole swath of software companies in the process. If you take a look at the biggest losers of the day, guys, it was not pretty. Celestica was down 13, but then again, they had very strong earnings yesterday. Tough to justify a 13 to 15% drop towards the lows. Take a look at Figma right here. After their IPO's been getting beaten down here, another 10% on the day. Names like Twilio, some cybersecurity names like Datadog coming down 8%, Rubrik down another 9%, despite having some of the best growth rates in the entire cybersecurity industry. People just don't care. All of software is getting lumped up into one big clump of just bad news, right? Moving on to Intuit right now. Intuit, multi-year lows on Intuit right here, back to prices of 2023, despite not missing a single earnings report since and growing all aspects of his business. I mean, you can take a look here. The death of the software trade right now is very real. Even UiPath, a very small company which had record earnings last quarter with a 30% move, gave it all back and more. Salesforce continues to drop another 6% on the day, coming into some prices that it has not seen since 2023 as well. And the list kind of goes on. We can kind of go through them, right? Adobe hitting another new low this morning, another 2.65%, hitting prices it hasn't seen since October of 2022, hitting the 200 monthly moving average. That is not easy to do, guys. That's the longest EMA that you can possibly plot on a chart. Well, I mean, there's longer ones, but this is the most relevant one for our analysis right there. And even some other ones in the software names, such as ServiceNow, right? ServiceNow down to about $116 after yesterday reporting very solid earnings, beat on revenue, beat on EPS. And the CEO did say that there's a narrative against software right now and that he doesn't believe his company should be down this much because they are growing revenue very nicely. They're growing profits. They're growing free cash flow. However, as you can see, this little template that I've drawn on this chart and many other charts, such as Duolingo or UNH, you might see this little pie chart that I like to draw certain times. And I only do this when the moves start making not much sense. Now, of course, we know there are some woes with the software industry right now. The fact that AI is supposedly going to just put all these companies out of business at once. But it's kind of funny today, and I'll explain why. So we know this little pie chart is fundamentals, technicals, and then sentiment/narrative. Sentiment/narrative, guys, is the most powerful thing that can affect the stock price. By the way, the stock price is everything that affects a stock's price. The fundamentals have a say in it. The technicals have a say in it in terms of momentum and support resistance levels and, where we are in relation to the moving averages and things of that nature, right? But sometimes the fundamentals don't matter. The technicals don't matter. It can just stay oversold and crack through every single EMA, every single support level because the sentiment and the narrative is too strong. So the narrative is that AI is going to kill all of these businesses. But you know what's funny about that, right? Is, well, who is this AI, right? Maybe you might think it's Palantir. Well, no, they sold off Palantir today anyways, right? So it's not Palantir. So where's the money flowing? Is it possibly into Google and Amazon's businesses because they have a investment in Anthropic? We all know the news on the Claude bot recently has been quite good. Well, as a matter of fact, no, they sold these off at the open as well. Amazon was down huge. Google was down huge before recovering intraday. So clearly not there. Is it Microsoft? I mean, the company does own 30 to 40% of OpenAI, and that's a very powerful AI tool that's very disruptive as well. Well, clearly not. So my question to the market is, well, if AI is supposed to be disrupting all these companies, what is the AI that's doing it? Because they're selling down all of the AI-oriented companies as well. So just to show you guys that sometimes the market can be very funny. Sometimes it shoots first and asks questions later and sells down things for sometimes unfathomable reasons, right? Which why Warren Buffett always says the market can stay irrational longer than you can stay solvent. But we are definitely seeing somewhat of an irrational move in the markets today, largely due to Microsoft's massive decline. And that puts us, look at some of these names year to date, guys. Look at the declines year to date on some of the software companies. Look at Intuit. Intuit's down 24%. It's the end of January only. ServiceNow down 24%. There's nothing fundamentally wrong with these businesses, only the sentiment and the narrative. It would be one thing if these companies were perpetually missing earnings and guiding lower, but that's not the case. Then you have some other healthcare insurance companies such as Humana. UNH is down, obviously, after the news the other day. Workday is down here. Salesforce is down here. GoDaddy is down here as well. Take a look. Trade Desk is down another 17%. Look at the Trade Desk chart. This is a disaster. Now, I understand they have big competition with Amazon right now, but still getting sold off in the whole SaaS landscape too. Adobe's down 16% year to date. Look at all these companies. AppLovin down 15%. Palantir is down 15% year to date. Autodesk is down 13%. Oracle is down 13%. So you notice a common theme. Most of the companies, now there are some exceptions, but most of these companies are in the whole software niche. And even FactSet, right? A legendary company that is down too, and the damage simply continues at that current point. Now, what are the trades that have been working really well this year? Well, we can see some of the same names that worked really well last year. You're talking about SanDisk, which, by the way, was up another 16% after their earnings this evening. Seagate Technologies, another memory name. Western Digital, another memory name. It's only the end of January, and these names are already up massively. Micron, another memory name, right? And those are the biggest gainers. Now, we do have some semiconductor plays such as LRCX, KLE, Applied Materials, Intel, and other things of that nature. But then you also have some defense corporations and some minerals and materials plays such as FCX, such as Albemarle, such as Schlumberger, which is an oil and gas play. So some of the themes that we've been talking about, the defense companies like Huntington Ingalls, which is a shipbuilding company, right? So some of the themes that we've been talking about early on in the year over the course of the videos in the last few weeks are playing out, right? We're talking about second order AI effects, connectivity plays, everything that goes into the data center, right? Which is memory and a lot of connectivity plays or semiconductor equipment companies. So that aspect of the trade is working. The defense aspect of the market is working as well. LMT and a whole bunch of defense corporations on the highs right here. The metals and minerals portions of the markets are working as well. But you can see, guys, right? No names that everybody's been used to performing over the past few years. No SOFI, no Robinhood, no Palantir, right? No big tech names all the way up here. No, you got to go a little bit deeper. And that's been the theme of this year so far, to understand where the money is rotating to. You may not agree with these moves, and you may want to buy some of the names that are on the lows, and that's perfectly understandable. I'm just here to say that if you haven't pivoted into some of these themes early on in the year, you're probably not making much money, right? Especially not if you're trying to trade your portfolio up in record time, right? It's different if you're a long-term investor, of course. We always say to focus on high quality, long-term compounding companies, not sometimes these short-term themes. But still, it appears as though the people that have been making a lot of money very early on this year, especially in trading portfolios, are just chasing things at perpetual highs for a certain theme and a certain narrative. Now, that's fine. We can talk about SanDisk. We can talk about Micron as well. We can talk about SLV, silver and gold, obviously being very popular trades. But it's all about kind of just chasing the momentum. And you might think that that's a bit strange, but was that not what people were doing last year with names like Palantir during this entire rally up here? Names like Robinhood, right? Names like NVIDIA over the past few years. Like, there is one move that reminds me a lot of the memory names. And you might think that I might reference Palantir or SoFi or Robinhood or NVIDIA. No, the name that SanDisk and Micron remind me of is a fun little company that used to be wildly popular for a short span of time. Actually, one of the companies that's moved the most in a very short amount of time. Can you guys guess what that company is? It's a company whose services were so highly in demand for a very short period of time, and then we found other suppliers and supply actually normalized. And that company was good old SMCI. Yeah, we forgot about that one, right? We forgot about this absolutely ridiculous multi-month rally on SMCI, which culminated in a very strong peak. And then, of course, they had their accounting issues and other things, but then also competition from Dell came into place, competition from IBM came into place with different server racks, and then they kind of just slowly faded away. But most of your exponential moves, guys, the parabolic nature of the market sometimes is unforgiving, especially if you are blindly buying some of these names. Now, I'll remind you, they all are the same. It's always sometimes when you find a bottleneck or a large supply constraint, and then people buy these regardless of the valuation. Now, I will remind you as well, SMCI, when it was up here, people were also saying was cheap because there was a demand, a high amount of demand for their products. There was a shortage of supply, and the company was guiding for very, very strong revenues. But nobody is exactly quite sure when it's going to stop because these companies aren't long-term compounders. They are a key focus point of the market for a certain time frame, right? They're not long-term compounders. They're very cyclical in nature. So sometimes when we're chasing these cyclical parabolic moves, you can argue that they're cheap and they will continuously put out very strong earnings. But when do the comparable numbers stop? That is a question that you have to be asking yourself if you're in SanDisk, if you're in Micron. So yes, these trades are very strong, and I would not doubt that they can indeed continue. But just beware of the parabolic moves and beware of managing your risk as well if you're chasing things like these or even chasing names like silver. Usually the parabolic moves get the most violent towards the end, but all you have to understand is that you're not getting the best risk to reward if you're buying these themes or these different names all the way up here. You could argue that there is still some meat left on the table for some profits, right? But we can't necessarily say that we're early to these plays anymore. So please keep that in mind if you're thinking of potentially selling off some of your lagging positions or losing positions and chasing all this massive momentum in either memory or silver and gold or some of the metals, right? The copper trade has been very popular recently. Look at the copper ETF, right? At least this has some utility in the next few years. Their uranium trades has been very powerful as well. I like copper, I like uranium. The only problem with them is that if gold and silver have a massive pullback, they may drag down the entire metals trade with them. So that's why if I am trading these, I'm trading these with a little bit of reductions in size. So the market themes and the market narratives continue to be very powerful into 2026. And hopefully you guys have been able to watch many of my videos that I've dedicated to the topic, because now at the end of the month of January, I'm going to stop making the themes and the sectors that are going to be the best to play in 2026. And we'll focus more on the daily movements of price action and earnings and things like that, and kind of shorten the video. So hopefully you guys have enjoyed all of the things that I've brought to you over the course of the month of January. But now, as I am going to be traveling for the next month, we will bring the time of the videos down a little bit and just focus on the names of the day. So that being said, guys, in today's video, this was a long introduction, but thank you for watching. In today's video, we got a few things to talk about. Of course, we got a few earnings to go over first. So earnings we're going to tackle today, we're going to talk about Mastercard, Visa, and Apple. We will talk a little bit about SanDisk at the end of the video when we cover the biggest gainers and losers, but I won't be covering their earnings in like a 10-minute deep dive or things like that. We'll just talk about it as part of the broader move, as we have a little bit in the introduction so far as well. So we'll be covering Apple, Visa, and Mastercard for today, all very strong companies. And just because, you know, they're not necessarily only tradable themes, right? They can be included in terms of long-term portfolios. So I know there's a lot of people that watch these videos that are traders, but I also have to cater to the whole investing community as well that wants high quality, long-term companies at somewhat attractive prices as well, right? So we'll cover those earnings. After we're done those earnings, we will recap the very crazy price action that happened today across the indexes. We'll go through the SPY, the Qs, and the rest of our markets here and derive where the rotation is, where it isn't. After that, we will take a look at our big tech name list right here. Big tech got put through the washing machine today. It ended the day not too bad, but at one point today, everything except for Meta was bright red. Meta holding up those earnings gains, 10.4%. So we'll take a look at this list and derive if there's any trade opportunities after their earnings or maybe before the next batch of earnings that we have next week on companies like Amazon and Google. At the very end of the video, guys, we will be going through the biggest gainers and losers of the day, and we will kind of pick certain names on these lows here that could be very interesting to kind of build some positions into for the rest of 2026. We will talk a little bit about software, we'll talk a little bit about memory as well, and we'll talk about everything in between too. So we'll spend some time on that section, and that's gonna be it for today's video, guys. So without further ado, long introduction, let's move into the actual action, shall we? And to the SPY, down 0.2%, the Q's down 0.6%, but as I said, the SPY was down over 1.5 almost, and the Q's at one point today were down over 2%. Good, decent end of the day, but still, the damage was done very early morning with this big Microsoft narrative move to the downside, right? In terms of your market rotation, well, the heat map actually looked pretty good. The damage was largely concentrated. I mean, it looked wildly different in the morning, guys. There was much more declines than this, but overall, not too bad of a day, right? The damage was concentrated into software and other plays of that nature. Tesla coming down after their earnings too, but Apple, NVIDIA, Google, and Meta kind of there to hold up the rest of big tech to prevent the Qs from really falling off a cliff. Financials had a very good day. Visa and Mastercard had very good earnings, and the banks with a little bit of a bid. I was saying that the banks were interesting in these locations, and I do think that it could be a very interesting trade for the next few weeks, as we might just have ended the big consolidation phase on the banks that's been lasting for the last few weeks. Consumer staples, not a bad day, nothing to report too much there though. And industrials, a very strong day for industrials, energy, real estate, and utilities. So your market breadth today was very healthy, especially into the end of the day. Take a look at the one-day relative performance here, and you'll see that even better. A lot of sectors moving higher. Communication services, that was largely Meta. Real estate, energy, financials, industrials, and defensives. Unfortunately, though, some of the more popular and talked about names, especially in the technology sector, just were not doing too well. Not able to hold up uptrends, not able to go for the breakouts, and just getting perpetually sent to the downside. Looking at names like Palantir, names of that nature, right? Sadly, a lot of them were underperforming today. And on the one-week relative, well, you might think with such a large amount of red today in the markets in the names that grab the most attention, right? You might think the markets were looking bad over the past 1 week. No, as a matter of fact, most of your market segments are higher. Energy continues to be a super solid trade. Hopefully, you guys are up some decent money on this one. We were talking about this one end of December, going for the multi-year breakout, and XLE looks prime. This is oil and gas, of course, so please keep that in mind. That being said, that's it for your market rotation recap. Fear and greed index still right now sitting at a 62 read print, showing good breadth, good net new highs on the New York Stock Exchange as well. So keep that in mind, right? When we're thinking whether or not the markets are healthy, we always got to assume, or rather we got to look at the market breadth indicators, and the market breadth indicators today were not too bad. We've been noticing a short-term pullback here on the percentage of stocks above their 20-day EMAs. It's okay though, 53%, not that bad, just some portions of the market consolidating after some very nice moves, such as the financial sector, the healthcare sector, and the technology sector overall. Percentage of stocks above their 50-day EMA, the most closely watched institutional metric for the health of the market. It's still very healthy, guys. 62% of all stocks above there. Now, there are some disasters in the market right now and some very awkward moves, but suffice to say, the broad market is doing quite well. And lastly, percentage of stocks above their 200-day EMA, still a very healthy print, right? At some of the highs of 2025 and even into some of the highs of 2024, 62% of all stocks. It's just that in this market, if you're not in the correct stocks, you may be wildly underperforming by a lot. If you're in some of the correct stocks, it's a very slim niche of stocks that are outperforming, and maybe they're just not as big of a position in your portfolio to actually carry the rest. But I mean, if we're looking at the S&P and the Qs, right? What have we done in the past 4 months? It's not really been in a hard, aggressive trending market, right? The S&P is barely above the levels that we had in October. And the Qs aren't even above the all-time highs. So even if you're an index investor, SPY and QQQs more specifically, right? Your portfolio probably hasn't really done anything. You know what I mean? And that's largely because large caps have been out of favor. Take a look here at my favorite large cap growth ETF, SCHG, same concept. Since that peak in October, this ETF has done nothing. The value trade has been very interesting. The dividend portion of the market has been very interesting. And that was one of our key themes entering into the new portion of the year, right? This dividend ETF right now, I know it doesn't sound like a lot, but it's up 6.8%. And that doesn't say much, but I mean, when you have a dividend ETF outperforming the QQQs, which are already up 1.51, it just shows you, right, that the money has rotated into various other aspects of the market. So it is a weird stock pickers start to the year, but nothing that we haven't seen before, right? We've been doing these videos together for 2 years, and these themes, these narratives, and their rotation is all part of the game, guys. You may as well get used to it, and you may as well understand it so that you can best position as well in the markets too. So that being said, guys, that's everything for your early market introduction. Now, before we get into earnings, there's just a few pieces of news that I did want to cover that'll be notable to us for possibly tomorrow. Number one here, Trump saying he's going to announce a replacement for Powell as Fed chair Friday morning. So we'll see who he picks. There's a few picks out there, such as Kevin Warsh, Kevin Hassett, right? And Rick Reeder, essentially. So we will see. Potentially this is going to be a big event for the markets tomorrow. I don't expect this to move the markets in a substantial fashion, but, this will be the, this will be the Fed chair in the background, as we know that Jerome Powell is out in the month of May. Moving on a little bit further here, you got some massive IPO launches in 2026. Do not forget this, which is why the space theme has been very popular. SpaceX going to IPO at a $1.5 trillion valuation. And today, there was some news that reports had emerged that Elon Musk is considering merging SpaceX with Tesla and XAI, which, mind you, is the reason why Tesla, even though it was down 3.45% today, was up about 3.5–4% in the after hours. This is a very interesting piece of news, but you also got OpenAI coming out and Anthropic as well at a $500 billion valuation. Speaking about OpenAI, well, we got some more news right here. Amazon is in talks to invest into OpenAI to the tune of $50 billion. So keep that in mind, guys. OpenAI is said to be seeking up to $100 billion in a new round that could value it as high as $830 billion. We know that SoftBank was also considering upping its stake into the company for another $30 billion. So OpenAI is getting some investments from all over the place. And even though you may not like OpenAI or ChatGPT, if you want the AI theme to continue, guys, you kind of need them to perform, right? Because if they go under for some which reason, it's definitely going to hurt the market narrative in the short term in terms of the AI no longer bubble. We can't say bubble anymore because the valuations don't support a bubble, but still, right? So those are some interesting pieces of news. Nothing on the table tomorrow in terms of macro. I mean, you only have the producer price index, but that's really nothing notable to us. But tomorrow you do have some interesting earnings in the names of SOFI, American Express, and then some of the oil companies. Now, the oil companies, Chevron and Exxon, have been doing very, very well to start off the year. Look at these gains. Look at Chevron, man. It's breaking out, right? Breaking out of like a 4-year downtrending channel. Super strong move. Very interesting play for the rest of the year. And look at Exxon. Exxon breaking out of a 4-year range. We talked about this one back here. So in the event you are participating in the oil and gas landscape, because we talked about them so heavily on the video, it's not for everybody, but some people love this stuff. Congratulations, guys. This one was a very nice winner. So that being said, guys, before we get into more technicals, let us dive into our earnings. I won't try to spend too much time on these. We'll get through these as quickly as possible, and then we'll move into some fun stuff, which is some charts, of course, right? So company number one, we're going to talk about Apple. And coming into Apple earnings, we were very bullish. I will remind you because we knew that Apple would have a very strong Q4. We had the early numbers from the iPhone 17 sales. There was so much demand, such a shortage of supply, big wait times for Apple iPhones, and we had the China data, which was to be quite good. And Apple today did not disappoint, despite the stock being roughly flat in the after hours, only up about 1–2%. Apple having one of its best quarters in the past 5 years. Take a look at this EPS right here, beat by 6.18%, and the revenue beat by 3.88%. This is a big beat, guys. It may not seem like a lot, but it is almost a $6 billion beat by Apple, about $5.5 billion beat on the revenue. That's not easy for them to do because analysts are usually quite in tune with the Apple sales pipeline. Some of the easy numbers for Apple, look at this revenue number. 16% year over year. This is one of Apple's best quarters in terms of year over year revenue growth that we've seen in a very long time. Service revenue was up 14%. This matters because it's a very high margin portion of the business. Operating income was up 19% year over year. Look at the operating margins in the past few quarters. Upswinging. Very nice upswing there, and EPS was up 18% year over year. More statistics from Apple in terms of the breakdown from some of their segments right there. Look at the greater China market, guys. 38% year over year. This is massive. Look at these Apple China sales growth numbers, right? The past 3 years, China's been a bit of an issue for them. But with the iPhone 17 release and many new products, well, look at this massive surge in China's sales growth. Now, this is going to be tough in terms of a quarter-over-quarter comparable, but this is definitely a very large contributor to today's earnings gains. Now, iPhone performance, that was up 23% year over year. It's been a very long time that we have seen this amount of iPhone revenue growth. Of course, it's not going to last forever, but still contributing heavily to that revenue beat. Mac, unfortunately, was down 6.7% year over year. iPad was up, making up for that a little bit, as they both have roughly the same revenue impact on the company. Wearables. Now, Tim Cook on the earnings call said that there was a bit of a shortage in their wearables, too much demand, not enough supply, and as a result was down 2.2% year over year, not because people weren't interested. Matter of fact, he did say that the release of the new AirPods was going really well for the company. Services, as we said, was up 14% year over year, and products division overall 16%. So a very solid performance by Apple, notably mostly all across the board. Geographic performance was also quite good, but it was led by China. America's 11%, Europe 13%, Greater China, we said 38%, Japan 4.7%, and the rest of Asia Pacific 18%. So it wasn't only China, guys. You got double-digit growth across most of your end markets, especially the bigger ones. So very nice performance right there. Gross margin also came in very nicely, and net income for Apple was a highlight for this quarter, guys. Net income, Apple posting some of the best net margins we've seen in a while. 29.2% net income margin. So Apple, very, very strong earnings report. I'm very happy as an Apple shareholder with this one overall. We are currently sitting, guys, on $140 billion on the balance sheet. And this year, Apple will be injecting $100 billion in buybacks into the company as well. So please keep that in mind. If you're an Apple shareholder, you love those buybacks. Over the course of this most recent quarter, they've already done $24 billion of buybacks. Your installed base is now at 2.5 billion active devices, almost a third of the planet, guys. This is absolutely massive amounts of ecosystem moat for Apple right there. Record business performance and strong margins led to EPS growth of 19%, setting a new all-time high EPS record, and they generated nearly $54 billion in operating cash flow, allowing them to return almost $32 billion to shareholders in the form of dividends and these juicy share buybacks overall. So a very strong quarter for Apple. Keep that in mind. Moving on to the revenue breakdown from Apple, just to give you guys a sense of the scale and the size of this beat. Here is your Q1 end. Well, it's actually Q4, but they're one quarter ahead just for fiscal reporting purposes. Look at these iPhone sales. Massive amounts of iPhone sales right there, guys. But all divisions not doing too poorly, right? Mac is there, iPad's there, although they haven't really moved that much in the past few quarters, past few years. AirPods, this was a highlight, right? $11 billion right there, or AirPods and wearables rather. And then the services division. Look at this clean chart for Apple services, right? Let me move myself over so you can see. Clean expansion. This is the blue column down here. Very clean services expansion by this business overall. A few more highlights that we're going to go over. Obviously, the headline, Apple sales surged 16% on a staggering iPhone demand, but we will focus on what was said and some of the other metrics that we didn't cover so far. Gross margins. Keep this one in mind because it's going to matter later on in the article. 48.2% gross margins because Apple was asked about the infamous memory shortage and would it affect their gross margins. You know what's funny? Apple actually said, no, not that much. Even though they're seeing rising prices, they're able to make efficiency gains elsewhere. And they guided for next quarter, 48 to 49% gross margins, as if the memory issue was not even a problem for them. Now, finance chief Kevin Parekh said that Apple expects revenue this quarter to rise between 13 and 16% on an annual basis. This is your guidance, very solid, which will be equivalent to between 107, or rather, let's call it about 108 billion and 110.5 billion. The guidance estimate from Wall Street, 104.84. So smashing not only on this quarter, but also for next quarter's guidance as well. Apple said it expects, once again, constrained iPhone supply during the period. Very nice. So it's not only one quarter. This is a multi-quarter thing. Apple also said it expects its services unit to have year-over-year growth rate of roughly 14%, which was the same as the December quarter that just ended. Further things right here, we set an all-time high record for upgraders in mainland China, and we saw double-digit growth on switchers. Switchers is people switching from Android over to iPhone devices. This was said by Tim Cook, so this was also one of the big reasons for that massive China beat. And lastly down here, or before last rather, earlier this month, the company announced it would partner with Google Gemini, to use its Gemini AI model power to power Apple Intelligence software. So this is going to be something coming out in this Q1. Over the next 2 months or so, we should be getting an interesting rollout of the new and improved Siri, and you can thank Google's Gemini for all of those improvements. Moving on lastly here, of all of Apple's devices, including the iPhone, Mac, and iPad, use a lot of storage and memory, raising questions about how the company plans to handle increased component costs as memory prices around the world are surging because of an AI-related shortage. Well, here's what Cook had to say. We're in a supply chain mode to meet the very high levels of consumer demand. We're currently constrained. At this point, it's difficult to predict when supply and demand will balance, but he did increase gross margins, and analysts were very surprised. Gross margin increase 48 to 49% is the guidance for this quarter. So no, Apple's margins apparently will not get squeezed by the increasing price of certain of its components. All in all, guys, this was a very solid quarter for Apple. Oh, never mind. That's the next one. Very solid quarter for Apple. And if you are a shareholder, you should be quite pleased with this one overall. Now, Apple is currently basically flat, right? So is Apple a buy at these levels? Well, at the end of the day, guys, I say this a lot, but at the end of the day, it's true. Apple is Apple. Now, I do agree the revenue growth has not been the same over the past few years as the big boom of Apple devices earlier in the 2015, 2016 era when Warren Buffett bought the stock. But the moat of this company is not that they have better technology than everybody else. No, not at all. It's not that they have better phones. It's not that they have better laptops. No, it's the 2.5 billion devices worldwide and the ecosystem moat that locks everybody in to this very powerful ecosystem. That is Apple's true moat. And as a result, it does deserve a little bit of a premium, right? Now, that being said, at 260, where we stand right now, the forward price to earnings at about a 31. The PEG ratio is quite high right now at a 2.94, and the free cash flow yield is about a 2.71%, which is just okay. So is Apple trading slightly rich right now? Indeed, it is. This is the higher end of some of its historical price to earnings ratios. Apple, for me, at this location right now, remains a little bit of a nibble. I'm not going to say it's a screaming buy right now, but it is one of the most powerful companies on the planet. Their ecosystem is arguably second to none in terms of stickiness. That is Apple's true moat. Their sales pipeline is now re-accelerating with very exciting products through 2026. I think they're going to have a good year, and I have been saying that around this 12 EMA, around this whole 250, 240, 230 area, this little pocket is indeed the little nibble area for me. I've been an Apple shareholder for the longest time. There is no reason for me to sell my shares. Usually I sell any of my long-term positions if the fundamental thesis changes. Fundamental thesis on Apple has never changed. It's just that they're a bit more expensive for a bit less revenue growth, but it is decent for a little bit of a nibble. Not a full send buy if we're looking to, but if we're looking to add to the position a little bit, I wouldn't be opposed to it, right? With keeping in mind that we are getting a nice little, if we come back down there to like 240 area, it'll be a nice discount, 15+% from the all-time high. So that's everything I had for you guys for Apple. Hopefully you guys enjoyed that. Now let's move into some other companies, which some people might say were boring. Visa and Mastercard. But recently, these companies haven't been boring, right? They've been the subject of many different headlines. The Credit Card Competition Act, or is it the 10% interest rate cap on credit cards from President Trump? I mean, that was supposed to come into effect January 20th. It's now January 29th, and still no interest rate cap. Keep in mind, it does have to pass through Congress, though, which is why, but still no interest rate cap, still no penalties being levied against either these companies specifically or the banks that are actually the ones that collect these interest rates, because these, we know, right, Visa and Mastercard, they're only networks. They don't collect any interest charges. Many people don't know that, but indeed is the fact, which is why these companies have very low risk and very high margins because of their network effects. They don't hold any loans, consumer loans on their balance sheets whatsoever. They are just literally toll booth companies. So that being said, we're going to do Visa first. We're going to do Mastercard. We won't spend too much time on these because they're just very boring companies, which is why I like them and I hold them both in my long-term portfolio. Toll booth companies, international network effects, very difficult to replace, very difficult for new entrants to come in and disrupt the business too, which is why they do make the cut for positions in my long-term portfolio. I'm looking for high-quality companies, high moats, and very predictable natures of earnings and margins. And as we can see right here from Visa, no secret to them, right? Very consistent EPS, very consistent revenues. Sometimes you can have some little sentiment mishaps and some big headlines that send them down, but most often they are usually always conducive to being buying opportunities when you do get some of those headline-driven sell-offs, right? So speaking about Visa earnings today, very strong earnings, guys. 0.88% beat on EPS and a 1.99% beat on revenue. Now, they were up a little bit because MasterCard reported earnings this morning, so Visa kind of followed suit. But then when they had their own earnings after the close, they came down by about 1%. So nothing big here on Visa. And the reason that they came down is not because they had something bad about earnings. No, they just missed a little bit here on their processed transactions. I'll show you this chart that I keep bringing up in just a few moments here. So revenue on Visa, there's just no problems here, guys. Up 15% year over year. EPS, 15% year over year. It's it's just business as usual for these companies, which is why I'm a fan of investing in them. They are buys for me right now. Process transactions, this is the reason that the company came down a little bit. I mean, they missed by a tiny little fraction, right? They were still up 9% year over year, but missing the street's estimate by just a little hair, right? Cross-border volume, 12%, shows that international card spend is very strong. And once again, being the share repurchase, the buyback kings, right? Visa and Mastercard usually are. Another 5.1 billion in share repurchases done. That being said, what we have on the table is still $21 billion in terms of share repurchases. If you take a look at some of the earnings, guys, they're very boring, which is why I love these companies. Some people ask me, why do I even bother talking about them? They're just not exciting. But that's not the point, right? Sometimes in the portfolio, depending where you are on your investing journey, right, you kind of like to have some of these high moat companies. Sure, they're not as attractive as the Palantirs or as the memory companies are right now in the market, things of that nature, but they can be a very nice backbone to anybody's portfolio if you're looking for very high quality companies with high moats, right? Take a look at your 2025 through 2026 payments volume growth. Over the past quarter, you can see here payment growth accelerating into the holiday period and continuing into the January phase as well. Process transaction growth, no problem here as well. And cross-border volume growth, a good measure of international card spend and travel and things like that. Card spending abroad, essentially, right? People, when they travel, this is what's known as cross-border volume, right? When you cross the border and spend on your card. So it's a good sense of whether or not the consumer is healthy in all aspects of their spending. Total payments volume growth, nothing to see here, guys. 9% credit, 11% debit, and thereafter you have a 10% total on total payments volume growth. Very solid, whether it's US or international, companies still performing. US, solid numbers, down a little bit versus the Q4 of 2025, but still, these are very average numbers, guys. This is what Visa always does. They're always in the same metrics, though international has been a highlight for both them and Mastercard recently. Look at these nice numbers here. Credit 10, debit 16, total 13, right? Very strong. So you get a total number here on Visa. Not much change overall, but nice to see them really booming in their international markets. Transaction and cross-border volume results, as you can see, processed transactions, 9% payments volume growth, 8% solid. Cross-border volume was also very solid too. And the total amount of cards, people still continue to get more credit and debit cards issued by Visa and Mastercard. Well, issued by the banks, but backed by the Visa and Mastercard networks. Solid, nothing to report here. Very boring earnings, extremely boring earnings, but that is a quality of a benefit of a very high quality company, right? It's a company that you don't really need to worry about after earnings, right? It's not a fast growing tech company that you have to look at whether or not their 50% EPS growth rates are slowing down or things like that. No, it's just a very boring company that you can hold in a portfolio for years and years, and you can be fairly certain that it's going to take something very wild to disrupt these very massive moats. Stable coins are not going to do it, guys. It's been a common thing over the past year. People saying that stable coins are somehow going to disrupt these networks. Stable coins are not going to disrupt these networks, guys. People have credit cards for different reasons, right? If anything, stable coins will disrupt people using maybe debit cards because it's cash for cash, but stable coins don't provide credit, right? People use credit because if you can always count on one thing, guys, is fortunately for these businesses, but unfortunately for most people, you can always count on people spending more money than they have. And people are also very attractive to the benefits and the perks of the cards, the reward systems, the insurance that you're provided for travel and other expenses and things like that, the nice benefits that you get as a card holder, such as reduced rates on rental cars or whatever they are, airport lounges, right? It's the whole ecosystem that really keeps people in the whole credit card landscape. So that being said, guys, that's everything I had for you guys for just the Visa earnings recap. Solid quarter. I'm happy with this one as a Visa shareholder. Now, it hasn't been it's not even that tough of a time, right? It's just been boring as a Visa shareholder for the past 12 to 14 months. But usually when a company consolidates this much while improving their earnings sequentially more, as you can see right here, beat on EPS, constantly raising EPS, constantly raising revenue. So when such a high quality stock just stays flat while improving most of their metrics, it gets cheaper, right? So that being said, Visa is at one of the cheapest valuations it's had in a long time. Forward price to earnings is a 25.68. You usually do not find Visa trading at a forward mid-20s PE ratio, nor do you find it that frequently trading at a 3.5% free cash flow yield. So Visa for me is a buy at these levels. If we somehow drop a level more, 310 and 315, it's going to be even a better buy for me. And historically, guys, when you buy Visa between the 12 and 26 EMA, because it's so consistent, we can use its charts history, right? Whether it's back here in 2014, 2015, 2017, 2019, or 2018 rather, the pandemic or the great bear market of 2022, it's usually always been a buy on a technical landscape, but also at these forward valuations because it's just so darn consistent. That's everything I had for you guys for Visa. Now let's get into one of their sector peers, which will be Mastercard. And now I will bring you guys the comparison, right? They're almost the exact same company. Visa is the bigger company, but Mastercard is growing a little bit faster in certain segments, a little bit faster growth in the international segment, and a little bit faster in what they call card member services. So everything that goes around, like the connectivity services, right? Like the loyalty programs, the rewards programs, you know, and things of that nature, right? When you're booking things through the Mastercard network, well, through your bank, but it is a portion of the Mastercard network, right? So growing a little bit faster in certain elements, but for the most part, guys, these companies are very similar, very high margins, very good free cash flows, buyback kings, consistent EPS, consistent revenue. Here's your total transaction volume. As you can see, neither of these companies has a problem growing their total transaction volume. Mastercard is in red, and then Visa is down here in the blue. As you can see, Visa is just a bigger network overall with more customers, but Mastercard is a little bit, is growing a little bit faster in certain end markets, right? So keep that in mind. Moving into the Mastercard earnings more specifically, I mean, they were very strong. I mean, you can see from the chart right here, Mastercard was up 4% over the course of the day. Very nice buy. We were talking about them being very nice buys down here. Maybe you guys pick some up. 12% beat on EPS, 0.37% beat on revenue overall, but such good consistency by these companies, right? Revenue was up 18% year over year. Adjusted EPS was up 25% year over year. Of course, they do a ton of buybacks. Gross dollar volume, 7%, cross-border, 14%, switched transactions, 10% as well. And then you got a whole bunch of buybacks, 3.6 billion during the quarter. They are the buyback kings, and their buybacks authorized still remaining $16.7 billion. Yes, very strong numbers. The buyback kings remain in place. Gross dollar volume, as you can see, worldwide 7%, US 4% growth, rest of the world 9%, which is why I say they're growing a bit faster internationally. Visa is as well. The best segments are international. Moving on further, fourth quarter switch transactions and cards, 10% growth on switch transactions and switch transactions every time you swipe your card, essentially, right? So in terms of cards, the total card growth, 6% growth, still gaining members every single quarter, every single year. Fourth quarter net revenue, as you can see, very strong, a bit faster growth than Visa right there on the top line, total net revenue growth, but nothing to see there at all. As you can see, value-added services, this is what I was talking about, right? This is the segment that's growing faster than Visa, the value-added services. Now, it's not the largest portion of their business. That is still the payment network, but still, it is a fast-growing segment of the business. The payment network was up 12% overall, so just pay attention to that one overall. Now, whether it's domestic or cross-border, as you can see cross-border, heavy transactions here, and the transaction processing amounts, also very good reports from there. And that's pretty much everything, guys. I wish there was more to report. Like, look, they don't even bother. Looking ahead, thoughts on 2026. They always leave this slide blank. There's nothing here. So I guess it's just so boring, right? But you might be wondering, well, did they say anything about the consumer? Don't worry, I got you for that as well. Not much. They said the consumer was healthy, like the banks, right? When we talk about the Visa earnings call highlights, I used Grok AI for this one. I mean, the CFO said it many different, the CEO said it, and the CFO said it many different ways. All the metrics are reflecting resilience in consumer spending. They see nothing. They're assuming that macroeconomic environment remains somewhat stable and that the consumer spending remains very resilient overall with no changes to their expectations moving forward. I mean, you got to kind of believe them, right? They have all the data. Think about all the data that Mastercard and Visa have in terms of people's spending habits from lower income cohorts to middle income cohorts to the high income cohort segment. I mean, we get to hear from the high income cohort segment tomorrow with American Express. Mastercard said more of the same. The CFO said this. They observed a disconnect. They said that consumers were resilient. But listen, he said also what we've been talking about, and even Powell has been talking about this as well, right? And many of the banks have been talking about this as well, too. They observed a disconnect between consumer confidence surveys. You remember, right? People are bearish on the economy. You know what I mean? Somewhat bearish on the economy. And they say that they're out of money. They don't have that much spending power. Everything's expensive. That's what they say. And that's what they report in surveys, right? So there's a disconnect between consumer confidence surveys and actual behavior, stating consumers fill in surveys, but their spend behavior hasn't actually changed. He described a savvy and intentional consumer, one that's using digital tools, loyalty programs, and rewards effectively. No impacts from tariffs or other factors that we've seen, with healthy spending continuing into January and consistent across regions and income bands, supported by jobs markets and wealth effects. So there you have it, guys. Visa and Mastercard basically saying the consumer, despite what they say, is still spending nevertheless. So the final question of the hour is Mastercard a buy? Mastercard, in my opinion, at least for myself, is indeed a buy. And I've been adding to this one on some of these declines into the 540 range. And I did add some just the other day in the 530 range as well. Mastercard, after consolidating for roughly 12 months while increasing their earnings, just gets cheaper and cheaper and cheaper. At about 540 where we stand right now, you're currently trading at a mid-20s forward price to earnings. Very rare to find this one right there. And also a trailing 12-month free cash flow yield of 3.5%. Very rare to find Mastercard trading at this free cash flow yield as well. So historically speaking, the company is indeed cheap. Very strong net margins, very strong network effects, very strong buyback position as well. Mastercard and Visa, at least for me, I have been adding. You guys are always free to do what you like, but usually when you go back in terms of historical standards, finding Mastercard between its 12 and 26 monthly EMAs, while their fundamentals just keep getting better and better, usually have proven to be very attractive historical buys. I know it's been a little bit slow recently, but that's probably not going to last forever. I do believe that most people who are buying these companies now can be very nicely rewarded into the future. So that's everything we have for you guys for your earnings presentations. Hopefully you enjoyed those. Now let's jump into some good old charts and kind of derive or explain what actually happened today and are we still healthy? So taking a look at the good old S&P 500, well, I'll remind you, the macro tailwinds have not changed. Despite the intraday volatility that you can see sometimes in certain sectors and themes, the bullish tailwinds remain. I will remind you, we talked a lot about this throughout the month of January, and this will be continuing throughout the rest of the year. The only thing you got to pay attention to, guys, is the unemployment rate and the labor market, right? But we got news from Jerome Powell yesterday, and he said that things were looking a lot better than they did a few months ago, but still, keep that in mind. That's the only thing that could possibly derail this market over the course of this year. It is indeed the labor market. We know inflation is largely not a problem anymore. Inflation index all the way down here. And you got some huge macro tailwinds, such as very strong GDP. I will admit a lot of that is due to the AI infrastructure build. You're also in a rate cutting environment with the end of quantitative tightening. You got the very strong earnings that we've been posting so far over the course of this quarter. All the earnings so far, despite some wild moves, all the earnings have been super, super solid, guys, with very solid guidance as well, where it's the banks, the credit cards, the tech companies that reported so far, right? Even though Microsoft's down today, there's no fault in their earnings, especially in terms of guidance. And also, none of these companies are guiding for a recession or a bigger pullback in consumer spending or nothing of that nature, at least not just yet. So the landscape looks pretty good, which means that these little dips, especially when found into support, can be very interesting buying opportunities, right? So we've been talking about if in the event we had some weakness because of the Microsoft earnings today, well, we'd just be looking for a back test. And that's kind of exactly what happened. 685, 678 remains your support zone. The bulls looking like they want to go for a bit more, but in the event tomorrow's red, you can see the futures right here, and we dip a little bit more. Just understand your line in the sand, guys, is down here. Unless we crack that, we can't really say that we're going into a larger weekly consolidation phase. Now we're just kind of slowly grinding up higher. It's definitely not a big trending market like this, nor such as we saw during 2024. It's just kind of grind mode right now. Very slow, but I wouldn't say there's any red flags necessarily in the S&P either. Moving on to the QQQs, same concept. It's just kind of grinding, right? This persistent grind since the highs in October, not able to crack those. Looking for a higher low. We'll see if tomorrow we get another dip, but all these dips are looking for higher lows. Anything above 607 will be an attempt to continue this uptrend and possibly go for the breakout. There's not too many big companies reporting that could send us for a breakout higher. Apple was very good for the markets today. Next week, we get Google and Amazon, and that'll kind of be the end of your big tech earnings overall. So keep that in mind. The Qs just kind of coiling up right here. The weekly timeframes also show no sign. You would only get nervous, or not nervous, but you'd only expect further weekly consolidation if you crack these lows, crack support 613 on a 605, and that would be synonymous with more weekly consolidation. As of right now, it's just a very tight range of accumulation right here with a bullish leaning bias because your macro tailwinds indeed are bullish leaning. Moving on to the XLF financials right now. Financials had a really good day, and pay attention to this one, right? We've been talking about the pullbacks on the banks. Now we have a tradable bottom, right? Bank of America down here. They did not quite achieve our reaction zone, but when you see a usually bullish engulfing candle like this, it gives you a tradable low. You might be able to assume that your weekly higher lows are set. Your monthly higher lows indeed as well might just be set, and you might just be looking a bit higher on names like JP Morgan, Bank of America, or whatnot. JP Morgan has a better tradable bottom, in my opinion, because it's a massive support range at the same time. So the lows would be like 295. You would go for the upswing continuation for the higher time frames. Stop down here, take profit will be new all-time highs, end of weekly consolidation potentially, and maybe end of monthly consolidation into the support range as well. So looking like nice trend reversal trades here on some of the banks, and of course Visa and Mastercard do remain buys. So financials, that being said, the entire sector not looking too bad, right? You got the daily downtrend, they're slowing down, and now they might be looking to put in the engulfing move here, change the trend, and as a result, set the weekly higher lows, go for the move higher, and on the monthly timeframes as well, it's always just been monthly consolidation, might just be looking for a bit higher continuation into the rest of 2026. Moving on to the healthcare sector right now, healthcare dangerously close to some of these lows, 153.40. You get a breakdown below, and unfortunately, your weekly level is now going to be lost. It was a very nice weekly uptrend this entire time, but some little shortfalls in the health insurance sector. You lose this 12 EMA, you lose these lows right here, and you might just be heading for the ever so infamous weekly consolidation and monthly consolidation as well. We've been talking about this one a lot on the channel. Very nice 4 or 5 months of upside right there, but everything comes to an end eventually with a new higher low being hunted, and then you might just have a new leg of expansion. So if you're looking to play healthcare, I'd be carefully watching a backtest into 150 down about 145. This little pocket could be an interesting retest, right? Breakout of a big resistance range, the retest, and maybe the further run into the rest of 2026. Moving on to semiconductors right now. Well, not much of a problem. There was a problem earlier on today, but closing near the highs. Very strong move. Daily uptrend is maintained right now on the semiconductor trade. That in the event that you would unwind this, right? Let's say we would have engulfed today and sent us lower. Well, just keep an eye on the weekly timeframes, guys. You'd be looking for a weekly higher low, right? Many of these names are very extended. Names like ASML are very extended, right? LRCX, names like that are very extended. The memory names, of course, SanDisk, Micron are very extended. But, you know, we can find some names that have very strong forward growth metrics, such as Marvell, that is not extended at all, such as NVIDIA, which is not extended at all, right? Looking for the possible breakout, and even a name like AMD that is not very extended, but just completed its monthly retracements down here. They have earnings on Tuesday, and the valuation does support some further expansion. So many names are still in ripe territory, in my opinion, for an expansion amongst the semiconductor landscape. You just have to know where to look a little bit. The monthly time frame does look fine, still in big expansion mode right now. Moving on to the Russell roughly flat on the day. They did cut these lows, but they didn't close below it. If you close below this low, though, then we're going to have a little bit of an issue, right? You unwind this daily uptrend, which is really beautiful, and you go for the daily downtrend continuation, which would be just weekly consolidation, nice weekly uptrend, higher lows. You have it all the way down here, 247. You would just be looking for a new higher low for further trend continuation, meaning if the bulls control the monthly time frame, the weekly time frame as well, these pullbacks indeed would be for buys. So if you're playing either the Russell or individual small cap names, small caps will still be favorable. They have the macro tailwinds to be favorable, and the price action still held by the bulls on the higher time frames is favorable as well. So please keep that in mind. Now, moving on to different areas of the market, moving on to silver and gold. So wild moves on silver and gold today, guys. Wild moves. I mean, this is today's candle on Thursday. This is the overnight session right now. Look how wild these moves were. Right at the open, gold went down 6%. Not only yesterday did we have one of the best days in gold in recent memory, today, I mean, before they kind of bid it up, right? We had one of the worst starts of the day of gold in recent memory. And when I say in recent memory, we're talking in the form of, you know, years and years and years at this point in time. And that's what we've been saying, right? The fact that when you get these parabolic moves, they usually get very violent towards the end. Gold and silver at this current stage are kind of moving like parabolic tech stocks, right? They're not usually supposed to move like that, but just the heavy amounts of volume, the heavy amounts of retail interest, the mercantile exchange, right? The comics continuously changing margin requirements for these trades, central banks piling onto the trade, retail piling onto the trade. Very, very violent moves in either direction on the metals trade right now. That being said, the bulls are still, I mean, they're not losing much, right? We're just still hunting for a daily higher low. Pay attention how they react to this 12 EMA, because usually gold bulls have been able to bid this up when we fall down into it. So the only problem is if you lose too much of this move, guys, this is the last possible leg of the parabolic move, right? Short term. So it would possibly lead you into weekly consolidation. This weekly candle closes tomorrow. It's not looking the best, is it, right? Big wick on the top. It may lead you into a bit of consolidation, which would be healthy for these markets. Nothing is healthy when it moves straight in a straight line to the upside, right? So pay attention to this consolidation, guys. Be very diligent with your stop losses overall. Trailing stops are very good, and even clipping into some profits, which we were talking about yesterday, right? Clipping at some profits here, especially if this was just a trade for you. Nobody ever went broke taking profits, guys, right? If it's a long-term hold and you want to hold gold for the next 10 and 20 years, then you probably don't want to take some profits. But if it's a trade for you and you're looking to just capture some of those very nice gains and rotate them into other things, not a bad opportunity. And the same thing could be said about silver as well. I know some people want me to say that silver is going to $200-300. Perhaps, right? Perhaps. To be honest with you guys, sure, there are industrial shortages for silver overall. We know that it's nothing new here. Silver's been included in industrial processes for years and years and years. There's a short squeeze going on right now on silver. Everybody knows that, obviously, right? It's just you don't know when the actual top is going to be. Many people can throw out numbers. Maybe many people can throw out statistics, and we've done this many times on the channel as well. The fact of the matter is that these are not free cash flowing assets, right? So it's tough to derive what a terminal valuation for them should actually be. We can go off of shortage numbers and things like that, but that doesn't really give us much. It just tells us we're in a shortage cycle, kind of like the memory names, right? And they'll squeeze and squeeze and squeeze until, quite frankly, there's just no more buyers up here, right? It gets incrementally more tough for people to buy silver up here, especially when you look at this chart, right? Some people don't care, but most people, when you look at this chart, right, it's a very tough ask to be buying these in such a parabolic fashion. So keep that in mind. Higher lows are down here on silver, $90. This chart still looks good though. Looking for a new higher low. Pay attention how they react to this 12 EMA and the weekly chart as well. Not looking the best. It does look and feel like it's ready for weekly consolidation, but who knows? Maybe this just reversed this entire move. It's down 6% right now in the overnight session. They've been really good at buying these dips every time they happen, but you start losing some of your time frames, like the 4-hour uptrend, which they haven't lost in a very long time. You start losing that. It's looking more and more like daily consolidation is underway, and maybe even weekly consolidation too. So pay attention to that, right? Now, I'm pretty sure if silver drops to $90, some of you guys may just be like, oh, finally, it's my time to get in. But just watch the fact that, you're at record levels of RSI on the monthly, record levels of RSI on the weekly timeframes as well. So we're just kind of cooling off in the silver momentum right now, which is perfectly natural for anything that moves in such a parabolic fashion. Moving on to other assets right now, Bitcoin and Ethereum. Crypto just continues to get destroyed, man. Daily downtrend on Bitcoin, flushing your support lows, by the way, not looking the best, right? This always had the looks of a bear flag, right? Because they were unable to get the weekly uptrend breakout going, still trapped in this box, 94,000 out of about 85, and now breaking down below. We will see where this candle closes. Crypto closes this candle on Sunday night, not looking the best, right? Thursday session was pretty bad, 5% down on Bitcoin, and now another 2.5% in the after hour session right now. Yes, we're daily oversold, but not looking the best in terms of time frames. You wouldn't be surprised, guys, if this continues, right? Crypto's just been out of favor. Maybe all the money is flowing into metals and other things, and people are just not favoring crypto right now. It's always possible, right? People tend to flow to where the action is. And even, you guys know me, right? I pay very close attention to crypto. Many big accounts on Twitter that I follow on the regular just for updates in the crypto landscape. A lot of those traders have shifted to metals, which is something that you would never expect from them, right? So they always follow the money, right? So that being said, next level to the downside, 75 down to 66. The only thing you can do here is accumulate for the long term, because there's definitely no premise for a long biased swing trade. We have no time frames. You don't have the daily. I said that right here. You don't have the daily. You don't have the weekly uptrend. You don't even have monthly momentum either. So tough to say this is the bottom, this is the bottom, this is the bottom. It's only a long-term accumulation phase. Same thing can be said about Ethereum, guys. Breakdown, right? Clear breakdown right now. Lower lows are being set. Sure, we're not taking out these guys, but it's not looking the best, right? Huge downswing. The bulls barely able to claw back a little bit. Bear flag into possibly more consolidation. Next line of defense for the bulls, 25 down to 2,200. So, there's just no interest in crypto right now. Crypto's kind of like gold and silver, right? No, it's not exactly like gold and silver, obviously, but, some aspects of this trade are very similar, right? Gold and silver And Bitcoin and Ethereum are trades that, because they have no inherent cash flows, like a company, right, where you can derive a fundamental value, they work on supply and demand. When everybody wants them, like gold and silver, well, they tend to move up in a rapid fashion. Now, you can derive reasons why everybody wants them in terms of macro things that make a lot of sense, but the same thing here, right? If nobody wants these, right, if there's not more buyers than sellers, they're just not going to go up. It's literally a pure supply and demand chart, pure price action. And for now, the price action does not favor the bulls. That's everything we had for the overall market rundown. Now, let's dive into some of our big tech names. And thereafter, we're going to take a look at the biggest gainers and losers of the day. So moving on to Apple. So Apple, we just covered them for their earnings. We're not going to spend too much time on this chart, but just so you guys understand who's in control of the timeframes, guys, it's the higher timeframe bulls, right? Beautiful breakout retest. And as we've been saying, they had phenomenal earnings. And I do believe this one would be a buy. 245 down roughly the 230 range. Usually when you pick up Apple between this 12 and 26 EMA on the monthly time frame, especially when the company is just operating at full capacity in terms of their fundamentals. There's no fundamental issue here with the business. Usually these drawdown periods can be a very interesting buy area. So I'm not saying we're going to go super heavy on this one, but just picking up a few extra shares for the long term, not a bad idea. If you're trading this one, well, they just gave you a tradable bottom, right? Tradable bottom is below this break of 246, obviously. So that being said, if we're going for a bit of a swing trade, bit of call options right there, well, you got a tradable bottom low right there. I do assume that they will have a good chance of recapturing the support level and moving the daily uptrend higher, especially after this earnings release. But just keep your stop losses in check. You would be going for the ever infamous monthly expansion trade here into the $300 level over the next few weeks, next few months type of trade, right? Moving on to AMD right now. AMD, very solid day, right? They were down at 1 point over 4%. They recaptured most of that loss. They have earnings coming up on Tuesday, and I'm very excited for AMD earnings. As you guys know, we've spent a lot of time dissecting this business in terms of their forward growth rates. Forward growth rates are amazing. Revenue and EPS. The company at 250 even is trading at a 1 peg right now. It's not that expensive, and they have huge amounts of growth, guys. Just to show you guys, just, you know, the EPS growth here is going to be massive over the next few years, and the revenue growth is a massive amount over the next few years as well. So AMD, if we're buying here, we're buying with a multi-year thesis, going for the breakout, going for the monthly time frame breakout indeed, as well as we did bottom here at the $200 range. But if for ever which reason earnings are bad and they somehow send it the market, AMD earnings will be good. But just like Microsoft have good earnings, and the market sold them off nevertheless, right? So if they do the same thing to AMD, you will find me buying it again back here in the lower 200s. That's the best area. I don't know if we break this support range right here, 232 to 220. All I can tell you is that if we come down there, I'll be selling puts in this lower region right there and accumulating a bit more, because there will come a point in time where we won't be able to really touch AMD shares anymore, right? When they go for the exponential breakout, I mean, some of you guys are going to chase for sure, but if we're looking for key strategic buys, you know, lower 200s is where we want to be. Moving on to Amazon right now. Amazon also not too bad of a day, down only 0.5%. Amazon was down over 2% today because of the whole Microsoft drama, but we're holding up nicely into earnings next Thursday. 240 down about 230 is this big wall of support. We've just reclaimed it. It was resistance for a very long time, and now we're claiming it as support. Weekly uptrend looks nice. We'll see if Amazon can actually do what they did last quarter and surprise everybody and go up like 10% and then give it all back. Just kidding. Maybe not this time, right? But the monthly time frame definitely looks coiled. They have a lot of very bullish catalysts here for the expansion. One of my favorite big tech trades into 2026. So we'll have to see what they do over their earnings, but it is still a buy for me. Moving on to Google right now. Google also has earnings next week. On the Wednesday session, Google went down about 2% as well before recapturing most of that, right? So I'm not really looking for massive Google expansion into earnings, maybe, but not massive. And I'm also not looking for a massive breakdown much before earnings either. Now, for earnings for Google, what you'll have to pay attention to is the comparable numbers, right? We know that Microsoft went down because instead of posting 40% cloud Azure growth, they only posted 39% growth, and the market sent them down this much. So Google has 34% cloud growth. If they come down to 33%, is the stock going to drop 10%? It would be pretty wild, right? But suffice to say, is Google a buy up here? That's what everybody wants to know, right? Well, we're extended on all time frames, right? Maybe not the daily. The daily's just been grinding these EMAs higher. However, the weekly still remains overbought. The monthly still remains overbought. And the forward valuation metrics for Google, although not egregiously expensive, are at the top end of its historical range. It is trading for a 29 forward price to earnings and a 1.91 peg. So it's not as cheap as some of the other Mag 7 companies in the market right now. Momentum has been very favorable. There is nothing wrong with this business whatsoever. They are firing on full cylinders, whether it's their search business, their advertising business, cloud, the YouTube business, and their other bet segment as well, which includes Waymo, an investment in Anthropic, and many different things. So I guess we'll have to see what happens for Google. They've been making very good advances in Gemini as well. So I am quite bullish on this company. It's just a very tough buy all the way up here, right? In terms of risk to reward on a forward basis. Moving on to Meta. Meta, very strong day, 10%, and they held it up. They tried to bring it down, but they did close at the high of the day, roughly, right? 10.5% to the upside. Very strong move on Meta. We covered their earnings yesterday. If you didn't see it, I would highly suggest that you watch my take on Meta's earnings yesterday. In the event the SPY and QQQ go for a pullback for XYZ reason, right? Well, back here you have support. That support level is 706 down to about 680. It's been big support in the past, right? Previous resistance area, support, and then resistance for a while leading into these earnings. So I do believe the bulls will claim this area as their own, and any pullbacks in here could be very interesting buys. For now, Meta is off to the races. Is it still a good buy here as they've shifted some of these timeframes right now? The weekly is looking good. The monthly higher lows are probably set at this point. We've been talking about it, right? Meta down here between 12 and 26 was a buy. Not only technically speaking, because we were looking for a monthly higher low for further expansion because nothing was wrong with the business, but also fundamentals wise. We covered it yesterday around 715-ish. The company is still cheap. Low forward multiple here, right? And a 1.71 peg. Very decent valuation on Meta. So yes, Meta is indeed still a buy, but I won't be able to say that forever. When Meta comes up to 900, right? That is when it doesn't become a buy anymore. It becomes a hold. But as of right now, still a buy in my opinion. Moving on to Microsoft right now. Microsoft down 10% on the day, as much as 12.3. I showed you the statistics, right? What you got to ask yourself this very carefully when you're considering selling your Microsoft investment, right? Or when you're considering about adding. Microsoft dropped today. When you look at the reason why, okay, the CapEx spent. I mean, Meta spent more money on CapEx than Microsoft yesterday, but they went up, right? The Azure growth, it went from 40 to 39%. There was literally no other red flags in Microsoft's earnings whatsoever. The market just decided to trade them down. We also talked about Microsoft's RPOs being heavily skewed by the OpenAI partnership as well. So that had an impact too. But to be honest with you guys, when you look at all these other instances of Microsoft sell-off, a global pandemic, a great financial crisis, an environment where tech companies were trading at 150 PEs, the 2000s, right? Does it really make any sense that Microsoft should be down this much? No. In my opinion, it's a buying opportunity. It doesn't mean, though, that Microsoft stock has to instantly turn around and V-shape this entire thing. They can stay down here for a while. Heck, they can even drop to a lower support range, 410 down to 385. I'm just here to say that usually when Microsoft is between the 12 and 26, and even a bit under, it's a buy, right? Whether you're back in the tariff lows back here, the bear market of 2022 when everything was dropping, the global pandemic, 2018 tariff sell-off, we have a lot of history here. And also around 450, it's a decent valuation, right? 420E, 28 PE, a 1.5 peg, not too bad at all. Great revenue and EPS growth, and their earnings were very solid. So Microsoft indeed down here is a buy. It's not going to be, in my opinion, maybe a company that recovers super quickly, but it is a buy for the long-term portfolios out there. And even for myself, it will be a buy for LEAP options as well. But I will be putting a ton of time, think 2 years on these LEAP call options. 70, 80 delta is what I'm targeting from these current levels. Beautiful support into a beautiful resistance into current support. And we're kind of back to, we've erased all the 2025 gains. We're back to where we were in 2024. So they're giving you a great discount in the event you enjoy this company. Moving on to Netflix right now. The Netflix story to the downside continues today. Not able to move higher at all. I mean, the bears have just grinded down this 12 EMA, man, right? It started off with the Brazilian tax event 2 quarters ago. Then after, we got the Warner Brothers deal that they were bidding for. And since that deal, it's just been awkward to be a Netflix shareholder, to say the least, right? So the bears full short-term control right now, what you need to see the bulls do, give me an engulfing move in a daily uptrend and recapture this 12 EMA. Then we could talk about the fact that the momentum is shifting. But as of right now, the bears control everything. It is indeed a falling knife. If we do crack this support level right here, 82, which are some of the lows of 2025, well, we're coming right back down here to the 200 weekly EMA, which would be some prices we haven't seen since 2024. The weekly 12 EMA has usually been a phenomenal buy, especially when you couple it with weekly oversold conditions, right? So keep that in mind for Netflix. Valuation is still very fair in my opinion. Forward PE is 25. The PEG ratio is a 1.28. You're not paying too much for Netflix right now, I'll tell you that much. But some people just don't want to touch it. I understand. But if you have been looking to buy Netflix or looking to buy more Netflix, now is not the worst time. It's just that we can potentially have to DCA through the mid-70s location. Moving on to NVIDIA right now. NVIDIA, not a bad day. They started off the day down about 2%, which is funny, right? Because all these companies increasing CapEx, what are they spending it on? They're spending on NVIDIA and AMD cards, which was super hilarious that this morning both AMD and NVIDIA were down. It's just going to show you. Sometimes the market, man, is just unreasonable, right? That being said, NVIDIA is not looking too bad, right? We're coming further away from our support range right here, 185 down to 178. We will see if they finally can do the good old breakout. It's definitely looking that way. The weekly chart looks primed for a upswing right here. The MACD is seemingly wanting to cross over into bullish territory. And the monthly, we know, has just been a monthly consolidation range right here, right? The 12 EMA has been curling up. We got some good distance. And NVIDIA here, I mean, I know I said 175, but now it's 10% higher. I mean, it's trading for a mid-20s PE and 10% higher than this peg, which would put it at about a 1.1 peg. NVIDIA, there's no other way around it. It's cheap, and I think they're going to blow everybody away with their upcoming earnings, guys. It's been coiling here for 6 months. I do believe NVIDIA fair value to be mostly around the 250, 270 range, and most of your analyst price targets, the average is indeed all the way up there too. So NVIDIA, looking forward to it. It's one of my favorite names as well into 2026 because of how much it's been coiling up. Usually when you coil up for this long, guys, the move in either direction, in this case, I do believe the direction is biased to the upside. The move can be quite explosive. We saw them try to make that attempt here before getting pulled back with the rest of the market, the rest of the tech market rather, in late October, early November. Moving on to Tesla right now. Tesla down 3.45%, but as we were saying in the introduction, up 4% in the after hours because of the possible news of a SpaceX merger with Tesla and XAI. So they did hold here, especially in the after hours move. They held support. Support right now is about 426, down to about 416. Not too bad. We covered their earnings yesterday, so if you haven't seen it, definitely check it out. Still looking for a weekly higher low, guys, for possible further expansion. The bulls still have this attempt in their bag, right? And the monthly time frame as well does still show that they have an attempt for a monthly upswing as well. So keep that in mind on Tesla. Not too bad. At least today, they gave you a tradable bottom. If we're looking to buy Tesla for a swing trade, stop loss goes below here. You are claiming this is your weekly higher low. You are claiming this is the monthly higher low after earnings, and also possibly the ability to reclaim the levels one by one. Starts with the hourly uptrend, continues into a recapture of the daily uptrend, and people's bullishness surrounding the energy sector, the SpaceX IPO, right? The robo-taxis, Optimus robots as well. So Tesla is largely a byproduct of the market's going up or down, right? The SPY QQQ go into heavy consolidation, Tesla won't make it. But if you're looking for this big expansion phase in the Qs, which we're looking for as well, because we have a bullish leaning bias, well, then you would have a bullish leaning bias on Tesla as well, especially in light of the earnings that reported yesterday. Moving on to Palantir right now. Palantir at one point today was down another 6%. And yesterday was down over 5%. So this is just so funny, right? Now, certain people will say that it's because the stock's overvalued, and we've been saying that for a while, right? But something changed here on Palantir. Is it just people shifting their interest to other names that are having parabolic moves, right? And people just don't like Palantir anymore? Well, that's debatable, right? Palantir was overvalued and also technically extended. It stayed there for a while, and that's what we can say. These technical extension moves, guys, can stay extended for a very long time, these parabolic moves, but then eventually they all end the same. They end in a very long and drawn out phase of consolidation. As we can see right here, Palantir's just been doing a whole lot of nothing for the past 6 months. That being said, they have earnings coming up on Monday. So short-term price action targets are going to be somewhat irrelevant because Palantir is probably going to move 10% up or down after their earnings, right? 10% higher would put you back, challenging the resistance range of 170 up to 185, and 10% lower, you would crack below this, and you might just be heading down below to the 130 to 120, which is the next area of support that you have on this chart, which would put you below even the 12 EMA, down closer to the 26 EMA for a very large retracement. Now, maybe some of you that have been looking to rebuild a position in Palantir or just start a position in Palantir, maybe if we do come all the way down there, it could be more manageable. This is not a bad location to be nibbling a little bit in spite of the high valuation if you're a long-term shareholder, 5 to 10 years, because it's tough to justify these valuations in the short term. But if I had two areas to go shopping for Palantir, it would be a little bit here and then closer to the 26 EMA, which would be closer to the 120, 115. I'm not saying it's going down there. I'm just giving you guys price targets. If it does go down there, pay attention to them because it would be good sell-offs from the highs, whereas the fundamental thesis hasn't changed. It's just Palantir is normalizing this valuation right now and unfortunately being lumped up in the software trade, despite them being one of the companies that is supposed to disrupt all these legacy business. Well, their stock price is going down, right? But obviously you can justify that with the valuation, people taking profits, moving it into other things, et cetera, et cetera, et cetera, right? SOFI down about 1% today. This doesn't matter. SOFI has earnings tomorrow. The expected move on SOFI tomorrow is about 6 to 7% after their earnings in either direction. 6% lower would put you at the bottom end of the support range, 22. 6% higher would start challenging the above resistance range again, 28 to 30. So we'll see what we get. If you guys want my glimpse into SOFI, I've said it many times this week, but I think that their revenue and EPS numbers will be good. Their user growth will be very good. Their product growth will be very good as well. Their product integrations will be very solid too. However, it's all going to be on the guidance. And we know that Anthony Noto, I've been following the stock for a very long time. Anthony Noto, you know, he used to be at Goldman Sachs and he knows how this game is played. So he's playing the game of, he usually always undershoots on guidance. He gives good guidance, but somewhat conservative guidance, right? He's not like Palantir. When he gives these earnings calls, he doesn't use words like Alex Karp does, or like Elon does, like explosive growth or numbers that nobody can ever think of. You know what I mean? No, he's very conservative, being an ex-investment banker. So that being said, right, it's all going to be in the guidance tomorrow. SOFI in the past few quarters, even though it's had an explosive share price, right? Anthony Noto, whenever he takes the stand, he has very conservative guidance because what he wants to do is he wants to give low guidance and then beat the expectations so that these little boxes end up green, right? But I think right now, after months of consolidation, retail investors want to hear him being super bullish on the future of SOFI. So despite the fact that the numbers will probably be very good tomorrow, it's all going to be in that guidance number, in my humble opinion. That being said, SOFI is consolidated here for the past 6 months. We've said this many times on the channel. Prior resistance highs, current support lows, monthly consolidation, much like Palantir. This is indeed a nice location to be rebuilding a SOFI position in the event that you took profits up here and we wanted to get back in for a bit of a swing. This is probably the area in or around where the stock can find a local bottom to low 20s if it comes down after earnings. And even if it pops after earnings, guys, I mean, we've said this, right? SOFI in the low 20s, mid 20s is not a bad buy, right? It's about a 1 peg as it currently stands right now, but I will redo this valuation for you guys on Monday because I won't be here tomorrow. I'll be traveling all day. Moving on to Uber right now. Uber up 2.41% today. Not a bad day for Uber overall. Bouncing off some of these support lows, but they have earnings next Wednesday. So am I expecting massive rally on Uber before earnings? No. Am I expecting a massive crack through the support before earnings? No. The price action might just stay muted here, right? So pay attention to that. The short-term bears are still in control. Nice bounce today, but meaningless in the context of the fact that the company has earnings next week and it will move wildly after that. It is into a nice support level low though. Taking a look here, 81 down to about 74 is that support range. So if we're looking to buy Uber as an Uber investor, is it a good proposition? Yes, low fundamental valuation right down there and still great growth for the company despite being caught up in some autonomous vehicle headlines. Every time we drop like this, it's something having to do with autonomous vehicle headlines, even though Uber has partnered with every possible autonomous vehicle company under the sun except for Tesla. Moving on to TSM right now. TSM down 0.8%. They were down over 2 today. Pay attention to line in the sand, 325. You lose that, you lose the daily uptrend, and you just get sent into weekly consolidation, maybe bringing you back down here, 310 to about 300, which would open up some short put plays possibly down here and maybe a nibble on some shares too. TSM up here is not super expensive, guys. Even at 340, it's fair in my opinion. 26 forward multiple, 1.37 peg. But then again, TSM, in spite of this massive growth, we covered them after earnings a few weeks ago. So go watch that one on my channel if you really want to. The thing is that they never really get that big lift because of the China threat to the business. I'm a long-term TSM shareholder. I understand the risks. If I were looking to do anything on this stock, I'd probably be looking for a pullback location. But as of right now, no swing trades for me. I'm not adding any shares up here. I did all my TSM buying. The last time was like last year. And so far, I'm just holding what I have, but I'm not selling anything. Company's guidance and the fundamentals are just too good. That's everything I had for you guys for the overall market rundown and our big tech list. Hopefully you guys enjoyed that. Now, let's spend about 10 minutes or so talking about the biggest gainers and losers of the day. All right, so taking a look at some of these themes in the market today. Speaking about CLS, number one, CLS, in my opinion, is indeed a buy. We did some valuation metrics right here, around $300. The stock is currently cheaply priced right now, Forward price to sales is very attractive right now and currently approaching a nice bottoming out area of support. So Celestica, despite having very good earnings yesterday, came down just like Microsoft. So Celestica, in my opinion, is indeed a buy up here. I would not be surprised if this stock has more momentum. Just be careful though, because the 12 EMA is a bit far away. This is like SanDisk and Micron, right? They had an explosive move. We've been waiting for the pullback. The bulls looking to establish support. This one looking pretty good. Here through the lower part of the range right here, 250s, could be a nice accumulation zone if you're looking for a very solid AI company at a relatively fair valuation with also fantastic growth prospects into the next few years. Not only for the next few weeks or few months, no, the next few years for Celestica will be very good as they are a direct partner of Google. And as long as Google doesn't stop spending, which they won't for the next few years, Celestica could be very interesting as well. Talking about some of the software names, guys. Am I buying some of these software names? Well, I think it might just be time soon to dip my toes into software. Not very big, but I know that these plays will take probably months and months and months to turn around, but I think the moves right now are getting a little bit overdone, just a little bit overdone, right? Salesforce, some of these companies are trading at some of the lowest valuations they've had, and no, AI is not going to disrupt their business overnight. Of course, there's the, the seat issue, right? In terms of licenses that will be issued to the tech companies, but you guys also have to remember, right? It's not easy to change a corporate software structure. I know everybody thinks that you can just code something in Claude AI and replace enterprise software like this overnight, but it's not so simple. Having worked in very large banking institutions myself for about 8 years, I can tell you guys, getting a bank or a large institution to change their entire enterprise software stack is not the easiest thing to do, right? It's a lot of disruption. It's a lot of retraining employees, implementing new systems. They won't do it if there's not a clear net benefit. And then even then, it's also not clear if they're going to do it anyway. So Salesforce, in my opinion, down here, 200 down to 191, where they were in September of 2023. I think this one is worth a nibble. And the same thing can be said about Adobe as well, right? Adobe has a lot of enterprise clients. You might say, yeah, but what about Canva? What about Figma? All those good things. Yeah, but can we make an attempt at these share prices at 2022 lows? I think it might be time if we're looking to just take an attempt at this one and hold it and try to go for the counter narrative here. The fact that it's overdone. Of course, these names don't have the most momentum and you shouldn't expect them to full V-shaped recovery. But if we throw a couple $100 or a couple $1,000 into a certain amount of names here, I'm not saying all of them, but the ones that I would be interested in maybe just nibbling a little bit and see what happens type of thing for a bit of a mean reversion trade here, a bit of a narrative and sentiment reversion trade. Adobe, Salesforce, Intuit, God knows why Intuit's down here. They're down to 2023 prices as well. And the valuation right now on these names is getting very compelling. There was a time where it was not, and I'll be the first one to tell you, but we're trading at quite low valuations on these. And ServiceNow as well, back to 2023 prices. I just redid the valuation for you guys tonight at 117. It's not super cheap on an absolute basis. You can make the argument that these software companies were expensive formerly, right? Not so much anymore. This one for me is a bit of a buy. And then cybersecurity as well. Some very, very solid companies like Rubrik, one of the most solid growth metrics in the entire industry, is possibly a buy down here as well. So building a little bit of a component of software. I'm not saying huge, guys, maybe like a couple percentage points as part of a larger portfolio. Just looking for the narrative reversion trade, the mean reversion trade. It's not going to be popular and it might just drop even more. But can we make an attempt right here? I think that we are getting a little bit overdone. I'm not saying AI isn't one of the most disruptive forces in the world right now. It is. But the fact that people are pricing in that these businesses are just going to absolutely fall off the face of the planet, seemingly in the next few weeks, is just a bit unrealistic. So after these companies have been down and down and down for arguably the past year straight in a row, right? I think it's a bit of time now to position in some of these names because it's never been an earnings problem for them. As I was describing in the introduction, right? If these companies were giving poor guidance, missing earnings left, right, and center, and losing clients by the tens of thousands, I'll be the first one to tell you that I wouldn't touch them. That is not what's happening right now, right? Their earnings are actually very good. So making an attempt on these, I'm not saying make it your entire portfolio, no, but making an attempt on them, I am a fan of, right? Some cybersecurity names, especially Rubrik would be my favorite, but it's going to take a while, guys. The bears control the narrative. They control the short-term timeframes. They control the medium-term timeframes. They even control the higher-term timeframes, the monthly downtrends on all these charts. Adobe, monthly downtrend. CRM, monthly downtrend, right? It's not easy to turn around monthly downtrends. How long does it take? Months and months and months, right? However, could these buys possibly be rewarded in the next few quarters, over the next year or so? Quite possibly. So this is not for everybody, but if you're looking for my guidance and my opinion, I do believe that it would be time right now for a little bit of a nibble, a little bit of an attempt. As I said, it's not for everybody, but for some people, it is there. And on the flip side of things, we can talk about the names like SanDisk that had earnings today, guys. SanDisk absolutely crushed it. They absolutely destroyed it. 71% beat on EPS, 12% beat on revenue. And we know, everybody knows memory's in a shortage. This reminds me of SMCI. It eerily reminds me of SMCI. Now, I'm not going to say, that SanDisk and Micron are going to have accounting issues and sending it tumbling, right? But the parabolic nature of the move, it just makes you think of other things that have done this, right? Tesla. It reminds me of Tesla 2021. It reminds me of Palantir 2024, 2025, right? It reminds me of, you can make an argument for NVIDIA out of 2023 into 2024 and 2025 as well, right? These parabolic moves are everywhere to be seen. But the thing is that you're never really sure where they're going to stop. Everybody knows that there's a memory deficit, there's a memory shortage, DDR prices are going through the roof, HBM prices are going through the roof, these companies don't have enough supply, it's supposed to last for the next 2 years. Yes, but when does, I typed in HBM, my bad, I meant to type in Micron here, but nobody knows, right? What is the terminal valuation that's fair for these companies that are going through a cyclical boom right now? It's not like they're Visa and Mastercard, right? Where they're toll booth companies. No, they're a company that they're in the right place at the right time in the midst of a massive supply shortage. And as a result, they have massive amounts of pricing power. But these trades are not for everybody. These trades at this current stage in the market are for the most risk-loving people. Don't kid yourself, guys. These moves are parabolic. The momentum is very strong. It seems as though institutions and retail alike buy every single dip. But as we know, these styles of moves do not last forever. So if you are doing these ones, you can't say that the risk reward is as attractive as it was here or maybe even here. No, this is pure vertical price action right now. So keep that in mind if you are looking to pay attention to these, right? Are you closer towards the end of the parabolic move than the beginning? Yes. You guys know me. I'm a big fan of waiting for these retracements. And don't say they're never going to come. They always come. Whether it's, you saw this happen just last year with IREN and BIS, right? Something always happens either specific to these companies or in the overall market that leads to companies that are very favored with parabolic growth curves, and then they pull back in a substantial fashion. I am a fan of waiting for the pullbacks, and don't say they're not going to happen. We just had one back here, right? I'm a big fan of waiting for some of these pullbacks. If they come back and pick me up, fine. But chasing up here with size, you need to have a very high risk profile as a trader to do that. And you should be trading with a stop loss. Daily higher lows are going to be your indication. But, when it opens after earnings tomorrow, it's going to be up here. Where can we put a stop loss? The short answer is you can't, right? So some people will just close their eyes, buy this, and just follow the narrative. And that's fine if that's the type of person that you are. But for everybody else, right? You got to have a little bit of pause when you look at names like this. So please keep that in mind. Now, moving a bit further, I guess I'm going to go over an hour 30, guys. But keep in mind, I'm traveling for the next month. I will still be making videos, but they will be much shorter. So I guess to end off the long form videos, because when I come back from traveling, we're going to switch up the format. The videos will be limited to 45, 50 minutes overall too. I've given you guys so much context over the past few, months just to prepare you for this new year. So many videos on sectors and themes, but I will have to cut down on the times of the videos. That being said, let's do a little bit more. So USAR, quadruple U's, the critical minerals plays. There was some new rumor out there by Reuters yesterday saying that the government was not going to guarantee a price floor for some of these critical minerals. Then you had a company like MP Materials coming on a Twitter yesterday and blasting Reuters and blasting other people saying, that's not true. What are you guys even talking about? Suffice to say, guys, this is a key theme for this year. We've talked about it many times. Critical minerals, a lot of these companies, whether it's USAR or quadruple U's right here or MP Materials, the only thing you have to understand is that you're buying things here, you have to understand that, although it is a very nice theme and narrative, keep in mind, you won't have much revenues much before 2027, 2028 for all these companies, whether it's USAR, whether it's UAMY, right? United States Antimony Corporation. A lot of these revenues come in deep 2027, 2028. So are they currently in nice accumulation periods? Yes, but you will get tossed around through the washing machine, through various news headlines, just as people got tossed around back in October overall, right? Could they be very interesting to build positions in? Yes. Could you do them individually or across an ETF like SETM? Yes. Most people would probably be better off suited choosing an ETF. But for all you guys out there that are interested in individual plays, just make sure that you do your research and you understand what you're buying, what this company is doing, and what their production schedule looks like. That way, if you buy here and it goes a little bit further, you know whether you want to dedicate more money to that trade and that you're willing to wait for the production ramp. Or if you're just looking to play momentum, guys, right? Well, play it with a stop loss, right? Target your higher lows, go for the daily retest cycle, as you don't want to just be unwound here. Last thing that I want for you guys is to buy the top of an exponential move and then just get unwound like this, and you don't understand why you're holding it. You don't understand why the momentum is not there, right? It's very tough to have consistent momentum when you can't really rely on short-term earnings and things of that nature to support your price. You know what I mean? So keep that in mind. Moving on a little bit further down our list right here. I mean, MSTR, BMNR, they're just going to come down perpetually with crypto until crypto finds a bottom right there. Talking about maybe some of the nuclear names. Now, these are other interesting plays, right? Oklo, SMR, NNE, okay? These are very interesting plays. The only problem with them, again, they have no revenue. So a lot of people would just be better off maybe playing a nuclear ETF like NUKZ or URA or things of that nature, rather than going for the most speculative names of them all. Oklo, SMR, they don't have revenue. They have nice prospects for technology and good partnerships with big tech for when that technology is ready. But if you're buying Oklo here, keep in mind, you are buying a $14 billion company with no revenue whatsoever. So the drawdowns could be substantial. If we are buying this one for a momentum reversion trade, I understand, nice weekly engulfing move, trying to set the higher lows, trying to go for it. Stop loss, keep it in mind, should be down there if you're trading, right? Oklo probably has the cleanest setup out of all of them. But shout out to NNE, same concept, right? Big weekly downtrend into key area of structure support right here. They're giving you a tradable low. This is your tradable low. If you're looking for the expansion trade back to the highs, that should be your tradable bottom. Keep that in mind if you're looking for things of that nature. Moving on a little bit further, is there anything else I want to talk about down here? We talked about software. We talked about other things. Oh, I guess we can talk about FSLR. FSLR got a downgrade today for no good reason, arguably. FSLR, in my opinion, guys, not a bad opportunity here. If you're going for the energy theme, solar theme as well, down to 200s, under 200, decent, guys. It's just a monthly breakout retest. Yeah, big breakout, possibly retest, establish some support lows down here and go for it. Valuation around the 220 range is not terrible. My preferred one is this small cap TE Energy, vertically integrated solar, everything from the silicon used for the panels to the actual solar panels manufactured in the good old USA. And we know that that's the theme of this year overall. So TE Energy, not a bad location to be building a position down here, 7. And if it drops a little bit more, guys, keep in mind, right? If it drops a little bit more, you guys know I'm in from here, from the $4 to $3 range. So I'm up a lot right now. So it's tough for me to tell you to buy something that I'm already up 2x on, but I'm looking to take this one a whole lot higher. Talking about like $20, $25. It's not going to happen overnight, but it's a $2 billion company. But look at the amount of revenue that they're generating, right? This is why I like it. So much revenue into this year and 2027 as well. So price to sales is not that expensive even up here. But keep in mind, if you're buying on the pullbacks and you're going for the fundamental thesis expansion, which, like critical minerals, the energy thesis expansion is like a multi-quarter, multi-year theme. So keep that in mind, right? We won't make all the money at once. It's going to be in various forms of swings as the company improves its fundamentals and delivers on its promises. Some of the favorite smaller cap names that I'm interested in, guys, UiPath down here, I think is a very interesting trade, 13 to 10. I will be accumulating a little bit more. Zeta as well, a very popular retail name, which surprisingly came down with software today, but didn't come up with Meta. It's an advertising company, so it didn't get carried up with Meta. It got carried down with software. Anyways, that being said, Zeta for me is indeed a nice pickup down here. I am building a position 19 down to the mid-teens range. Very solid company, guys, overall. Nice improvements in EPS, very nice improvements in revenue. So that being said, I am a fan of some of these names as well. AVAV, some of the drone names pulling back in a big fashion. You guys might know that I started nibbling AVAV here, and I will continue nibbling on this theme down into the possible mid-200s. I think the valuation is not terrible all the way up here, even though the chart looks super vertical. You guys know me. I'm a big fan of buying these bigger retracements, especially when it's something in theme, in the key narrative right now. AVAV is a $14 billion company right now, and currently trading at a factor of, let me just pull it up just so I don't say, it's currently a 7 price to sales. But look, very nice expansion on theme. Drones, military spending will be wildly popular. So instead of chasing the large cap names like LMT or NOC or Raytheon up here, all very good companies, of course, but have ran a lot, I'm playing some of the smaller companies, right? All the way down there. I'm playing AVAV. Shout out to playing Ondas as well. Ondas for me would be a play if we come out down here into the $9 to $8 range, possibly a nice reaccumulation range for this trade as well. There's many ideas in that whole segment. I'm also building a bit of position in Redwire for the whole space theme as well. My first entry down here was about $9.86, but if they give me a re-entry, maybe I'll accumulate a little bit more. So I am in some of these smaller cap plays. I know I don't talk about them that often, but you know, some of these key themes, energy, military drones, second order AI plays like perhaps Credo or, you know, Celestica on some pullbacks. I'm a fan of playing some of those themes as well in the market. And I think, guys, that's going to do it. Right? The data center plays, you guys know me. IREN's a buy for me, mid 40s. NBIS is a buy for me, under 80. That's where I've accumulated most of my positions so far. If they give me re-entry, I will definitely be playing because most of their growth comes end of this year as well. If you're a fan of CIFR, no problem at all. Do that. They all look the same as well, right? So keep that in mind. I think now we've covered most of the names. I'll try to bring up more names as frequently as possible, try to talk about more themes, more stuff that's working right now, but obviously with limited time in the video, I can't cover everything. So the best thing you can do is be there for these segments, end of the day, every day. So in the future videos, you know, we talk about Melly a lot. We talk about Robinhood a lot too. Melly for me is a screaming buy right now, even at current levels, going for the monthly upswing. We talked about Robinhood. Robinhood just has very tough comparables. It's like Palantir. I mean, guys, the stock is up like, you know, like 15x in 2 years. You know what I mean? So it's like, you will not get the same reward if you're buying here as you get here. But, you know, maybe for some people, it's interesting rebuilding position, lower 100s down to maybe the $80 range. I mean, they have tough comps and they're being lumped up with the crypto trade right now. Nothing wrong with the business. It's just they have tough comparables, right? And they're just being too closely tied into the whole crypto landscape. So monthly consolidation, unfortunately for them, is part of the investing game. So that is everything that I have for you guys today. An hour and 35 minutes. I am telling you guys, this is a promise. I know I've said this many times before, but now I actually mean it. This is the last super long wheel trades video. In the future, I hate, you know, I'm not this type of guy, right? But in the future, just to segment the value that I provide, of course, right? I'll be trimming down on the videos, the amount of things that I cover in the videos, and doing more analysis for our members in the Discord. So if you were looking for a community of over 350 members, active traders and investors such as yourself, if you wanted to join us in the Discords, this is where I do more of the deep dives, going through more of the names on this list. You can ask me directly, what's going on with this play? What's going on with this play? What would you do with this play? What are your thoughts here? Can we play this one with options? Can we play this one with shares, right? The Discord and our community is the real place to ask me these questions because I can't possibly cover everything in the videos, but I can in our chat rooms and in our morning live streams. Every morning I'm live for 2 hours at the market open. I trade live, and then I also take your questions on your stocks, your options, your long-term portfolios, the themes in the markets, the fundamentals of companies, the technical setups, all that good stuff. That's the best place to interact with me overall. So that's why we'll be trimming down the videos just to make them more efficient for the YouTube algorithm overall. And just because, to be quite honest with you guys, making these hour-long videos, hour and a half long videos every night is, it's a lot of work. I love doing them, don't get me wrong, but there used to be a point in time, 2023, when I started the channel, 2024, all my videos were between 30 and 45 minutes. I've extended them more and more to include more relevant news pieces throughout the day, more analysis on biggest gainers and losers to cover more names overall. I will still be doing those, but just not as much. I'll still be covering earnings, but perhaps just not as much. I'll be trimming down most segments of our videos just to make them more, just to make them a bit more condensed overall. So thank you so much for your attention so far. Thank you so much for your participation on the channel, your likes, your subscriptions, your feedbacks, right, in the comment section. I appreciate all that stuff, guys. As I said, if you want to participate more with us, get access to all my trades, all my private videos for our members, all of our chat rooms, our live streams. The link to join us in the Discord is down below in the video description. I'm looking really forward to seeing a few more of you guys in there with us. We always have a good time every single day. So hopefully you can be part of the community as well. We'd love to have you in there. And if not, I will see you right back here on the channel. That is it for me. Take care. Have a good day. While I'm traveling, by the way, last off, I guess I might as well just talk a little bit more. Last, I'll be traveling. You guys that have been here on the channel, you guys know every quarter or so I take a month-long vacation. I still make videos, but the videos will be Monday through Thursday or Monday through Wednesday, and no videos on Friday or Saturday for the most part. Top 5 options on Sunday will stay in place, but the videos, indeed, while I'm traveling, will just be a little bit shorter in their nature overall, but still the same quality of content, just a little bit reduced time horizons in terms of the videos, right? So that's everything for me, guys. Appreciate you. Thanks so much for everything. Take care. Have a good end of your week tomorrow. That's it for me. Have a good one. Peace.